Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now I wanted to start the week by wishing the fathers listening in a belated Happy Father's Day. At my end, I celebrated by taking my son to an indoor wall climbing arena. No surprise that he was considerably more sprightly and nimble up the walls than I ever will be, but it was a new activity for both of us, which I think was the biggest positive. Now, positivity, of course, is something that's been lacking in the markets for several weeks now, and the new week is quieter than usual, bar a few major events, with the US markets closed for a long weekend. But nevertheless, let's look at the three things we'll be watching closely as we go through the week. Now, first, of course, there are several key events across Asia. Today, China's central bank is scheduled to set the loan prime rate. And while we're not looking for any change, given the central bank faces a tough balancing act between easing policy to support growth on one hand, but also balancing that against not contrasting interest rate policy too much against the global rate tightening cycle that could place downward pressure on the currency. Nevertheless, policy is likely to remain a key focus through the week. Reports that the country's central bank had turned more supportive of reviving Ant Financial's IPO added one more item to the list of factors that suggest policymakers were turning increasingly supportive of growth, which many of you will recall is one cornerstone of an increasingly positive outlook on Asian and particularly Chinese equities. Now, China is not the only focus in Asia this week. Central banks in Indonesia and the Philippines are also scheduled to set policy this week. Japan also releases CPI inflation for May, though that might show a further rise, but we'd caution here the key is to strip out the impact of commodity prices and gauge how far the more sustainable demand-driven inflation drivers have strengthened or not. Second, in the US, there's also expected to be a big focus on Fed Chair Powell's testimony to the US Senate Banking Committee. Commentary from the Fed has been strong on inflation going into this meeting. In a report released Friday ahead of the testimony, the Fed said its commitment to restoring price stability is, quote, unconditional. This and Chair Powell's comments early in the week following the policy decision to raise rates mean any message emerging from the testimony is likely to continue to be quite hawkish on inflation. Though given how much has already been placed in the public domain last week itself, it's possible the impact on financial markets could be more muted than one would expect. Finally, we'll be watching key market indicators to get a sense of how risky assets are likely to trade through the rest of this week. Now, technical indicators are always one factor, of course, but from a cross-asset perspective, two trends may be worth watching. One is US bond yields, where the 10-year government bond yield has eased back below the key 3.25% level, but a technical chartist would argue that the yield remains in an uptrend. Second is the signal from crypto markets, which is arguably an indicator of sentiment from one of the risky assets. The price of Bitcoin did fall sharply over the weekend to under $18,000, and readers of our educational piece on cryptocurrencies will know that Bitcoin does appear to exhibit a high correlation with riskier small cap and technology equities. Both of these, of course, argue that Bitcoin's move over the weekend could signal further adjustment in sentiment in the days ahead. So several key events to follow across the globe this week, but on the positive side, the opportunity may very much be in Asian equity and dollar bond markets, given the more positive policy outlook here compared at least to the US. We take a pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.